All right. It's silver time. Okay. All right. Lots to cover. I post a whole bunch of stuff on Twitter, stock tweets, and Goldtent. Goldtent is pretty cool because I get to write bigger paragraphs, more information. The discussion seems to be more challenging, and you get to up your game and rethink things and keep yourself in check. So that's pretty cool that we get to have those type of conversations. Twitter is also great to propagate the information, etc. But it's so fast paced that you do a post and off it goes into the ether after a short while. So go check it out, guys. Goldtent. Right here on the right side, you get posts by authors, all these great posters, and a lot of the stuff I did, or all the stuff I did on Goldtent's right here. Click on Patrick, and there you have it, all my recent posts. So let's start with silver. Silver, I'm going to start with the gold to silver ratio. And I did something right here. It's called copyright. And it's a chart. Yeah, I have a little friend here doing the cliff hanging on top of this ascending trend line on the daily chart. Always look at the daily chart just for the turnarounds to see if that's going to spill over into the higher time frames. And the gold silver ratio, when I did this post, the RSI had already broken down a little while back, and slowly but surely the RSI, the gold silver ratio, decided to take a little jump off the cliff. Now here it is in with my on tradingview.com, the interactive way. We've seen before here how it fell, how it jumped off the cliff. Timber. RSI broke before, and after that, down we went. Same thing here, and right now, updated chart. We're starting to head. Next challenge is going to be the 85. So I trust most horizontal break lines. This is all great. These rising wedges, falling wedges. But for a definitive breakdown or momentum creatable breakdown, I love first a break of the diagonal trend line, and after that, if we get to break here of this horizontal support, and after that, for me, that's a go ahead. We sometimes get a retest here, and then we go down. So right now, the weight on the daily, this pullback could be over. If you look on the monthly chart, that's why I love going to the monthly chart. Here's my target, my 66 target there that I'm going for. Here you see it's just a wick noise. So right now we went up during the month. Oh no, GSR, it says it's going back up. The whole premise of a bull market goes down the drain. Oh wait, look at that. That's noise on the smaller time frames. We're actually having a red candle for this month. It's not over yet. Could go back up, but we're still in a consolidation pattern. That monthly defined resistance starting to get defined right here with closes. A green close for the resistance, and a red close. A red close for the support. This we're ranging right here on that 12-month moving average. Indecision yet, but the market right here picked it up, and right here it's pushing it down. So for me, the GSR is still in a sideways move pattern, and the upwards momentum that we had here is dead, or it's really been severely compromised, and we're just a question of time to digest to see if we go back up or down. But look at that. Look at those wicks. That's noise. All right. So this chart, I did it a little while back, but not too far back. See, the GSR was at a gold-silver ratio was at 87. Silver 1694, just below a little bit where we are today. This is the scenario where it's possible. So my previous podcast, gold hits 1,800 in 3 months. Where does silver have to be? Where does the GSR have to be? So that's what we're going to deep dive today. The first target for silver, first we have to bust above that 21 level. And if we just rush right through that, the equivalent of silver for gold's 1,800 is 27. So that's really the target. How much time is it possible? Is silver still positioned in the early bull market for it to go and reach that 27 target here, where what I call a wall, previous support now turned resistance. That's where it's setting up right now. And if gold goes up to 1800 in the next 3 months and silver goes up to 27 in the next 3 months, gold silver ratio will be hitting this monthly defined support right at 66. So something I like to look at is the weight of evidence for silver, and you could look at silver expressed in other currencies to see if it's just that the currency that you want to buy it in is very strong and the chart looks weak for silver. But if you look across all fiat currencies, how silver's performing gives you an idea of which direction it's going to go. Some weaker currencies are going to show you that silver's picking up strength, and that's something that could spill off in the currency you're trading. So right here we have XAG in Australian dollars, descending trend line, also a falling wedge, broke out a little while back. This is a daily chart about 5-6 days ago, and now trying to work its way up back to the that horizontal break line that I mentioned that I like to look at. RSI going down, broke out, so we have an RSI breakout right there. XAG in Canadian dollars, look at that. The pattern repeats. Breakout, retest, falling wedge, breakout, going to try to go reach that horizontal breakout line right there. And the franc Swiss a little bit higher up. You see the pattern, we're getting close. Are all going to strike zone, at least to go to test. RSI, same thing, broke out. XAG, oh, the euro's right on the line, about to silver express in your euros, about testing that break line right now. So you see how they move at different speeds, different shifts. Some currencies stronger than others at different moment. This is almost like a crystal ball to see that the weakest currencies are showing the way that the other ones will eventually reach. Because remember, the fiat currencies, it's a race to zero. So if a weak currency is able to get there, break down against silver, it's a question of time for the other ones to break down. Oh, so GPD, remember GPD had that too. Falling wedge, going to go test that break line, just a little bit behind. So euro right now is the weakest of the currencies. Breakout RSI. Hong Kong dollar, same thing, same pattern repeats over and over, creating validity to what we're looking at, that silver is preparing a move against all these currencies. RSI breakout. The yen, look at that. The yen has been so weak recently, and it's showing the way. Look at that breakout. Silver's already broken out horizontal breakout line. At the same time, falling wedge breakout, RSI breakout leading the way. So that's for me a precursor of how the other currencies could behave. New Zealand dollar has been pretty strong recently. Falling wedge, not out of it yet, but RSI has broken out, and I think there's a question of time before it hits its horizontal break line right here. So New Zealand showing some strength right there. Singapore dollar, same thing as the other ones. Falling wedge going up, RSI breakout, pattern repeats over and over. The common denominator is silver, showing its strength. And good old US dollar, that's the one everybody's looking at. Falling wedge, broken out. And now, whoa, look at that, right? Oh, what happened to my, oh, there it is. Above, it closed above. Not convincing, but this could be, so Japan, the weakest, then the US dollar, then the euro. And the US dollar right now showing weakness versus the other currencies. The other currencies were the first ones to break down earlier in the gold bull run, but now silver is showing that the US dollar is showing some weakness right here. RSI broke out way before we broke out, a few days before we broke out this wedge. So that's something I always look at, other currencies, and it gives you a clue of the health of silver versus the markets. If I would have seen other currencies starting to crack down on silver and the chart starting to break down silver versus other currencies, I would have been... it would put me on guard, but right now they're breaking out of this consolidation sideways move upwards. Here is another view we could give to silver expressed in all these other currencies. This is the volume analysis. I've done this previously on the other podcasts. So negative volume index, the logic is the rate of change of the price action, you calculate it when it's the volume is lower than the previous day. So if the volume is lower than the previous day, that means contraction in volume. If the price action goes up, you add it, and if the price action goes down, you add it. And if the volume increases, then you don't. Negative volume index stays flat. Inverse for positive volume index, on days of increasing volume, the rate of change is calculated here, and you overlay a 1 year moving average. Across above a 1 year moving average is very bullish. The negative volume index is seen as a smart money. They're piling on when there's low volatility, when they could place in all their orders. If you cross over the 1 year moving average, there's a high percentage chance, I think above 90%, that you're in a bull market. If the crowd money, the positive volume index is considered the crowd money, if they're also above their 1 year moving average, you have a double whammy. They're both confirming. So they're very good for confirming bull markets. Not so the percentage of for bear markets, not as good. But if you see the negative volume index, that's a smart money crossing over the 1 year moving average. They're in the trade. For versus the Australian dollar, look at that. They've been in the trade. They're still in above the 1 year moving average. And now we're starting to see trendline breakouts. The crowd has the reducer position, but bouncing off their 1 year moving average. See if that continues up. Canadian dollar, same thing. They've been in the trade since July, and that's when the precious metals market has been outperforming pretty much everything else. Same thing here, contracting. Close to that 1 year moving average for the Swiss franc. Ooh, see the euro, one of the weaker ones. The smart money has been piling in there, expanding from their 1 year moving average. Great British pound, another one that is showing that the smart money is piling on. So on those contracting days of volume, they're getting in. And as soon as the crowd gets on board, that should rocket fuel this move up, guys. Hong Kong dollar, same thing, all above their 1 year moving average. Japan, same thing right there. So you see the pattern. The smart money still in the trade, New Zealand dollar. And now they're about to resume their uptrend, increasing their position. And when the crowd picks up, we should have a big move up. Contracting, and when the crowd piles in on those up volume days. So this is, for me, very, very healthy, very bullish. Here's a silver expressed in the US dollar. And look at that. Smart money never went below, never stayed close, came too close to the 1 year moving average. Now already trying to explode. And here, for me, this is a sign. As soon as the crowd gets in, like it coiled right here to the 1 year moving average, exploded, explosion in price. And right here, we're about, if the crowd could get in, so on those up days in volume, if we could get price increases, and like everybody's looking at that for breakouts, when you have a lot of volume on breakouts, it's the crowd really joining after the smart money has started positioning themselves, and that just gives a crazy thrust for price action. And right now we're smack on the cusp of a breakout right there. Now, what about the silver miners? So we know silver is about to resume the uptrend, or high probability of. How are the silver miners behaving? Well, here's again, give full credit to Northstar to get me on this ARC analysis. If really helps visualize what I used to see as stage 4, Stan Weinstein stage 4, going down, consolidation or an uptrend. Look how the 12-month moving average is going down. It's following, squeezing the price action between the arc. Each time the arc has a touch, you could start drawing it. Squeeze. Here, contracting, and then explosion. This one you can't really trust for. It's not going to be a long, meaningful continuation trend, but it's very violent. And then you go hit that resistance. The first time you start testing it. And after that, when you start heading to the right hemisphere, that's when you want to start thinking about positioning yourself. First touch. And now you see the moving average is below, supporting the price action. And now you have the arc also supporting the price action. And this is combining that with, what if I put the true strength index? Log. So start combining that with True strength index turning up, bullish. See right here crossing over. As soon as we go up above that zero, above that horizontal, monthly defined horizontal breakout line, we're going to have, if we have a close above that, above this level, above 31.50, it's a vacuum. It's a vacuum all the way up here to 52 for a 63% gain. So this is very bullish, setting up very nicely. Arcs on the monthly chart, you don't wait for them to break out of here. You want to, as soon as this, you want to use the right hand side to give you an early entry, and you're going to ride this. Arcs on smaller time frames, you wait for the breakout, they're faster movement, you get trend up. But on the monthly charts, this is sufficient to start entering right here. Somebody really wanted to spin the gun early, could have taken here, but the TSI was not confirming anything. But right here, you have a lot of weight of evidence that you could have a squeeze going up. All right, to start closing the show, here's a summary of the environment of precious metals. Just look at gold. Here's the cut analysis that I do every week. Here's the descending trend line on the daily chart, the wedge. Here we're right on the cusp, close above 1484, gold up. Here's the open interest going slowly down. And after that, a close above that trend line could get a thrust up of a price action movement. Large traders, same thing, slowly diminishing the positions, very controlled. A break above this trend line, move up. COT index, we're not 100%, but we're above the May-June highs. So at any moment, I think this trend line could go down, break down, and that's going to give another move up in price action. And this non-reporting small specs, I keep looking at that because every bull run we've had in gold, the small specs had a net long position above the total shorts right here, and we're still climbing in that up direction. And let's look for the silver, because that's what we're looking at right here. 1725, that's the close I want, just to start off the domino effect of a price action going up. Same thing here, open interest, we're flatlining, getting closer to that breakout line. Large traders, same thing. COT index resetting, not as high as the previous time. A break below, that means the price action is going up. And look at that, the non-reporting, a lot more added short positions reduced and adding more longs, creating a net distancing itself from the short total short positions. I think that's very indicative that the people are positioning themselves for a next leg up. And I also look at, I know that we're covering a lot of things today, but this is to get the really grasp of the whole weight of evidence, the whole precious metals market. And I've done a previous podcast where rate cuts, we've seen that probabilities breaking out. Actually, that's what moves the price of the precious metals, not their actual rate cut, but probabilities. So let's say on a historical chart, probabilities went from a 20% to 40, a big breakout. And then the price action moves accordingly before we get the rate cut. Right here, I'm looking at the March meeting, FOMC. And you see that this is a current 87% chance that we'll still be at the current interest rates. But what's funny here is there's rate hikes are actually being priced in. So even if they're saying, oh, no rate hikes, there's actually 4% of rate hikes getting priced in. And there's increasing chances of having a rate cut. So this is, I think this is going to create a very volatile situation where when to decide this flips over the odds. So let's say the market decides eventually, oh no, we're wrong, we're actually going to rate cuts. All this is going to have to get priced in over here. And that's going to create a lot of energy, a lot of momentum to push the precious metals market upwards. If the inverse happens, I'm not sure that's going to be very good for precious metals market. We're going to have to wait to see how the price action reacts. But if the driver is rate cuts that drive precious metals up, if the rate hikes should be a deterrent, should not help precious metals market. So right here, I think this is going to create a catalyst. We're creating a volatile situation where the market's not quite sure what's going to happen next. All right, final chart, silver's future, noise reduced, monthly, like I love him. How are we going to get to that 27 target in 3 months? So right now, let's just start by imagining what type of move we need. 1 to 3 months, 91 days. We need a 58% move to bring us to 27. The TSI is going upwards, already going above the zero line right now. Crossed over right here. We're above an inclined 12-month moving average. The consolidation, as we see with that low work before, that's noise on the daily chart. On the weekly chart, we've seen that we're starting to turn around. So if we could get a good push, and first challenge is going to be here. That's a monthly defined resistance. Second one is going to be our 20 to 21 level right here. And if in the first month or second months we could bust through that, I think easily we have a vacuum right here. So the hardest challenge where people might lose patience, or I might lose patience, is actually trying to go through this noise right here, this proven resistance right there. So that might take a month or two to get above these levels, or maybe a little bit more. And after that, I think we could skyrocket up. A 58% move in silver in 3 months, very doable. There's tons of examples where we've had it before right here. 1, 2, 3 bars. We actually had a 50, is it here? This one here. 63% move right here back in 2010 when it went gung-ho crazy above this consolidation period. And there's a whole bunch more situations there. And the important part is, are we set up to do it? And as we've seen, the miners, the commitment of traders, all other currencies, we're close to a 12-month moving average. We're not stretched out right now. We're really close, coiling to bust up. A lot of positives right here. You see, I think this is the most we've pulled back, hitting that monthly defined, getting close to that monthly defined wall, previous resistance, now turn support. And just last 12-month moving average is something also I've been looking at, the distance from the 12-month moving average. And right now, I love drawing trend lines on indicators. Breakouts, you see breakout situations. Oh, no, not quite. Breakout. So this was our breakout. Now we've had the retest. Now we seem to be bouncing up above it. I really doubt that we were going to go lower than this in the price action. I think this wick, especially if the month of December closes here, we're going to go up from here. And then we'll see what happens. But right now, this is my best case scenario for silver and gold. 3 months to reach that 27 target, guys. All right. Thanks for watching. Ciao, guys.